Hello and welcome to the Business Standard Morning Show. I'm Kanishka Gupta and let's have a look at the stories for the day. Telecom to oil conglomerate Reliance Industries is going through a transition. The 65-year-old man at the helm, Mukesh Ambani, is now passing the mantle of key units to his children, almost a year after signaling the change. On Tuesday, the eldest 30-year-old Akash Ambani was made chairman of the company's telecom arm. And just like Reliance, reins of several companies are passing on to the next generation, like TVS, Godrej and Emami. This is unlike the Western model, where ownership and management are in separate hands. Apex market regulator SEBI also wanted them separate, but budged after resistance. So, in today's show, we ask why some Indian firms are not keeping the two roles separate. Is it good for them in the long run?
The stakes are high. Several aging tycoons across India have either passed on the baton to the next generation or are in the process of doing so. But it raises one question, and it has been asked time and again. Do the children of industry tycoons have the same business acumen and leadership quality? Can they steer the companies as efficiently? And isn't it against the norm on separation of companies' ownership and management? Let us explore. This week, Asia's richest man, Mukesh Ambani, set in motion his succession plan. After going through a bitter succession battle with his younger brother over a decade ago, which was decided in the country's apex court, Mukesh obviously didn't want to take any chance. On Tuesday, Mukesh Ambani stepped down from the board, paving the way for his eldest son, 30-year-old Akash Ambani, to become the chairman of Reliance Jio Infocomm, the country's top wireless carrier. Akash's twin sister, Isha, has already been at the helm of the group's consumer-facing unit, Reliance Retail Ventures Limited, for the last several years, while the third son, Anant Ambani, is focusing on Reliance's new energy business. Shares of Reliance Industries soared by 2.5% soon after the succession announcement on Tuesday, a kind of green signal from the markets. Similarly, last month, Jamshed Godrej, the chairman of Godrej Group's flagship company, Godrej Voice, appointed his niece Narayana Holkar as his successor. Holkar, who is the daughter of Jamshed's sister, Smita and Vijay Krishna, is an executive director who has been managing strategy, M&A, brand and legal affairs at the company. In 2017, Jamshed's cousin Adi Godrej's son Piroj Shah took over as chairman of Godrej Properties, replacing his father, while his younger daughter Nisaba was appointed the chairperson of Godrej Consumer Products. In February this year, Kolkata-based FMCG company Emami's founders R.S. Agarwal and R.S. Goenka stepped down from their executive positions. Agarwal's son Harsha was named vice chairman cum managing director, while Goenka's son Mohan was designated vice chairman cum whole-time director. Meanwhile, in the IT sector, two companies where leadership succession took a family-first approach are Wipro and HCL Technologies. Azim Premji's son Rishad was appointed as executive chairman of Wipro in 2019. Azim Premji continues on the board as a non-executive director and founder chairman. The first woman chairperson to lead a listed Indian IT company, Roshni Nadar Malhotra, took over the reins of HCL Technologies from her father Shiv Nadar in 2020. Down south, Venu Srinivasan's son, Sudarshan Venu, was elevated as the MD of TVS Motor Company in May, while Srinivasan's daughter, Lakshmi Venu, was made MD of another TVS Group company, Sundaram Clayton. While in all the above cases, the next generation leaders went through a systematic grooming process, one can also notice that family membership takes precedence when it comes to selecting a management successor. But is it always the best way forward for family-owned businesses? An experiment by Dabur's Burman family more than 2 decades ago paid off handsomely. Dabur India professionalized the company in 1998 when its promoter family decided to hand over executive positions to outside professionals. Today, the family has just 4 representatives on the company's 15-member board in non-executive roles. According to Kaval Ramachandran, a professor at the Indian School of Business, historically, both the chairman and managing director or CEO positions have been reserved for members of the business families.
I don't think there's one answer that fits all situations because every situation is different. The second generation of many families is extremely highly educated, has got a huge amount of relevant business experience before they join their own businesses, and are very quick to learn and have a fantastic background. And in such circumstances, a family-based succession is very appropriate and very good, as we have seen in the case of Reliance, or in the case of the Goenkas, or in the case of other families which have the TVS family, for example. All of them have got, or the Godrej family, all of them have got excellent successors that were trained, and there was a plan behind it to make them the true inheritors. So in such cases, it works. But where it is happening only because of nepotism, it has grave seeds of self-destruction. And I think people are realizing increasingly that you don't want to destroy your own enterprise by short-term measures. The positions of chairperson and managing director should be separated. So whether it's a family-driven succession plan or it's an independent-driven succession plan, we're going to increasingly see a split between the two positions because the roles are so different from each other.
Meanwhile, SEBI's efforts to split the two roles for governance reasons have met with strong resistance. One key question is, even if the successors from these families are capable, are they the absolute best candidate for realizing shareholder value?
The Indian capitalism also has to mature. It has to mature to a point where a company does not belong to a family. The shareholder expects to get the best performance. And for the best performance, he wants the best person to take over the job. So if there is a nephew or a uncle or a son waiting in the wings, he should be in competition with an open field. The United States and Japan have made the leap to professionally managed companies. But they are European countries, of course, changing all the time. But Italy and France, I mentioned, that still have a strong bias for family management. So I don't think one can say whether it's West versus East. It's a question of development. And as I was saying earlier, that Indian capitalism only began after 1991. So we are very young.
What do you think is allowing the next generation of the promoter family to determine the destiny of the business the optimum solution?
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं? ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं? वो तो सबसे आसान है। तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
India's second largest healthcare provider, Narayana Health, is also at the cusp of similar leadership transition. Viren Shetty, an engineer and a management professional, is now executive vice chairman of the company, which his father and renowned surgeon Devi Prasad Shetty had established to provide affordable healthcare. In an interview with Business Standard's Sohini Das, Viren tells about the extensive expansion plans within and outside India. He also talks about lessons learned during the pandemic and how medical tourism is slowly returning to normal. Let us listen in.
I was quite curious about your overseas operations, and you have a major capex plan for both brownfield and greenfield expansion in India. So are there any expansion plans in some of the other geographies also where you're present?
Our investment in the Cayman Islands is in an expansion that is being added to our main campus over there. It is closer to the city, and this is a cancer hospital. We are estimated to spend about $100 million on building an onco-focused daycare surgery center. Outside of that, we are adding much smaller investments in clinics, diagnostic centers, things to bring our services closer to the people in the Caribbean.
So if I'm not wrong, you are catering to the local population mostly. But is there any plan to expand the scale there, as you just touched upon, so that you can, tap the entire Caribbean? Because 70 or 80,000 people is a very small population to cater to.
It is small, but they all need something. And so far, it wasn't provided for them. Most of them had to fly out of the country, go to the US or other places to get care. So while being small, we're also very controlled in the number of services that we're offering. And you can't offer the full range, but at least 90% of what most people need, we are providing. So for us, it's not just doing surgeries. We also want to get into primary care, secondary care, daycare work, as well as few things that are very advanced, like robotic surgery and oncology. Those are things we will offer. But yeah, at some point, you will max out. There won't be any more patients. And in that case, we will look at other Caribbean islands and replicating the same.
Now you also have plans for the North Americas, right? So maybe Canada or other geographies. So could you elaborate on that as well in terms of your North America plan?
It's not that we have a plan now. We're just thinking many years ahead into the future. Because like I said, all the Caribbean islands put together, they're all very, very small. They won't even equal the population of one Indian city. And it's only a matter of time before you run out of opportunities to expand over there. But since we're close to the world's largest market for healthcare, at some point in the future, we may look at expanding there. So we are talking to people, we're seeing what role we can play, but it's still very early. We have some ideas, things that can work out, but it could be that whatever we ultimately end up doing there would be very different from what we started out with in concept.
Now, coming back to your India plans, there is, I think, almost 1,000 crore investment plan for greenfield and brownfield in Kolkata, Bangalore, Raipur. Now, which will be your focus cities in India? How many beds would you be adding in the next 2 to 3 years? And what is the plan to expand your footprint within the country?
Our focus areas are Bangalore and Calcutta because those are our oldest cities. Those are our oldest hospitals. And that's where we are struggling to be able to admit as many patients as are coming today. Even today, the OTs are running full, the ICUs are full, and we're delaying surgeries for a lot of patients and keeping them there until we're able to process. So we desperately need capacity in both cities. So that's the highest priority. Outside of that, we're looking at brownfield investments in our existing hospitals in Ahmedabad, Jaipur, Delhi, Raipur, where we'll be adding one floor, 20 beds, 50 beds, oncology, certain OPD blocks, like that. So the 1,000 crores is mostly a large investment in additional campuses to the existing ones in Bangalore, in Calcutta, because we lack space. So we have to go to a different location, buy the land and put up a large building there. But these are long dated projects. These will take 2-3 years for construction come, by which time the situation will also change in that more and more people need healthcare and we'll have to invest even more.
Medical tourism, which was, I think, 10% of the revenues of listed corporate hospitals, it had literally vanished during COVID. But is it showing signs of coming back? And what is the forecast for this current fiscal year?
Still hasn't recovered because the flight schedules are not as frequent as they used to be. Connectivity is very hard. There are a lot of difficulties for a lot of people to fill out air Suvidha forms, get the RT-PCR done, get the visa and so on. So it's become extremely challenging. I don't expect the medical tourism volumes to pick up to prior levels anytime soon. If they do, it will only be because all travel restrictions are removed. But if the current systems still continue as they are, it's very difficult to expect very old, very sick people to travel across countries with, as it is, the hassle of managing the medical issues, and they also have to manage these new laws that have been put in place. But for us, it doesn't matter so much because our volumes have bounced back to pre-COVID levels and higher.
Where do you see Narayana this year of your revenue growth margins, as well as the revenue per occupied bed or length of stay, and also in the next 5 years? So one is in immediate term, how do you see the Narayana chain behaving, growth, and in the next 5 years?
Without getting any forecasting, I would say that there is a level of growth that we've been able to sustain pre-COVID. We believe we can sustain that both on the revenue growth as well as the ARPOB growth. Because like I said, we've made a tremendous number of investments in capacity, in improving our throughput, in doing very high-end surgeries like robotics and onco surgery and so on. So that should sustain. So over the next year, we'll maintain the average levels of growth that we're seeing pre-COVID. Post that, for the next 5 years, we're making a tremendous number of investments in our digital, in the infrastructure, in adding additional capacity in Bangalore and Calcutta. So that is over and above the organic growth rate. So that should kick in 3 years from now, because at least for the next 2.5 years, there'll be construction and a lot of disruption in the facility. So it won't really kick in. But post that, we should be showing above normal growth rates, both on realization and revenue. So years 3 to 5, that will play a major role. And in the mix of patients, we are in parallel pursuing a lot of retail care. And those things will lead to a lot more footfalls and a lot more queries for high-end procedures.
It was lovely talking to you. And thank you for taking out time to talk to us. We look forward to have more interactions in the future.
Thanks.
यार
मत पूछ यार,
फिर से स्टॉक्स में फंस गया।
तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
The stock of Narayana Health touched a new high recently, which can be attributed to its soaring profits. But all are not that lucky. As investors complete the first half of the calendar year 2022, which left them with burnt pockets, all eyes are on what the remaining 6 months will look like. Our next report takes a dive into some factors that may set the market's direction in the second half of 2022.
Halfway into 2022, investors continue to be on the edge as the outlook for the remaining months stays unclear. While analysts say that most of the damage has been done, with little room for further downside, key factors like interest rates, inflation, and corporate earnings could guide the markets over the next 6 months.
So investors should be looking at how growth and inflation environment is developing globally. Right now, it is still volatile and things are not clear. And in domestic markets, these data are also key points, and these are key points for central banks for setting monetary policy decisions. Another factor is the interest rate path, which is also important for the market. So to sum it up, I think growth, inflation, and interest rate glide path, which the central banks would be taking in coming policy meets, will be the key data points to watch out for things. The impact of higher raw material prices, commodity prices, and other challenges in terms of logistical challenges, supply chain issues have definitely impacted corporate earnings. And not only in coming quarter, but in previous quarter also, we have seen that this impact has been there for companies. We see this to continue in current quarter as well, with some pass-through happening because in last quarter, some of the companies have mentioned that they have initiated pass-throughs, and so some improvement could be seen in some pockets. Having said that, top-line growth has been encouraging currently, and the momentum should also continue in next quarter, which gives comfort that the demand is intact. And once things normalize on cost aspect, earnings could revert back to normal margins.
Growing fears of recession have dealt a blow to US equities, the ripple effects of which have been felt by emerging markets, including India. The MSCI Emerging Market Index has dropped around 17% this year, which is its worst fall since 1998, according to Bloomberg. Besides, US Fed Chair Jerome Powell has admitted that the Fed's expeditious move to raise rates could bring an economic slowdown. According to Morgan Stanley, though a developed market recession would undoubtedly weigh on Asia's growth outlook, the downturn could be relatively shallow for Asia. Back home, the trend of foreign investors that continue to be on a withdrawal spree from Indian equities will be another important trigger, though analysts do not expect FIIs to remain bearish on India for too long.
FIIs have been net sellers to the tune of nearly 2.8 lakh crores this year itself. Now, this has been largely due to rising interest rates and valuation discomfort, which was there at least at the start of the year. And moreover, continuous trending in dollar has also impacted sentiments for the FIIs. Now, going forward, we believe as soon as we see inflation concerns abating and interest rates turning stable, we should see FII flows coming back into the emerging markets, and especially India as well. And India has been, a proper long-term growth story. So we do not believe that FIIs would remain net sellers for a very long period of time.
The markets may continue to exhibit volatility today on somber sentiment ahead of the weekend. Besides, investors will closely monitor the manufacturing PMI for June and the preliminary trade data.
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
After the markets, let us move on to the world of professional swimming. FINA, the top governing body for swimming, recently voted to restrict transgender athletes from competing in women's elite races. Instead, it created an altogether different category for them, an open category. The move was met with both praise and criticism. Let us find out more about this new ruling. FINA is the international federation recognized by the International Olympic Committee for administering international competitions in water sports. It proposes rules and regulations for major aquatic sports such as swimming, diving, water polo, among others. FINA recently barred transgender women from competing in elite women's competition. The move was welcomed by many and slammed by Section 2. The debate around it started in March when freestyler Leah Thomas, a transgender athlete, aced Olympic medley silver medalist Emma Wayand to win the prestigious US collegiate title. To protect the rights of the athletes to compete and at the same time to maintain competitive fairness at events, especially in the women's category, FINA introduced the new open category. It seeks to provide opportunities for transgender athletes to compete in FINA competitions in the category that reflects their gender identity and does not undermine FINA's goals for the women's category. As more and more transgender women participate in elite athletic competitions, there is an increasing view that trans women who have transitioned into a female post the puberty still retain large amounts of testosterone, giving them competitive edge over women. A working science group set by the FINA found that post-pubescent males have circulating testosterone concentrations at least 15 times higher than post-pubescent females. A biological female athlete cannot overcome that advantage through training or nutrition. However, transgender men can compete in men's competition category as they gain no biological or physical advantage. FINA's move can be seen as mainstreaming trans women in society. It can serve as a platform for trans visibility also. Meanwhile, World Soccer's governing body FIFA and World Athletics said they will revisit their transgender eligibility policies, taking guidance from medical, legal, scientific, performance and human rights experts.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Leah Thomas was also the first known transgender woman to win an NCAA swimming championship. But now she might not be able to compete with women professionals. That is all for today. We will be back with more news and analysis on our next episode. Stay tuned and thank you for watching. If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.